Hello friends, good morning to all of you, and today this video we are going to discuss the another part from the module D of the BFM. So we have already covered the module A, B and C. Module A and B are the most important modules in case of the BFM CAIIB. And if you want to get the complete CAIIB crash course, you simply just need to WhatsApp me writing CAIIB and WhatsApp it to the number 83609 Or you can be doing one thing. You can be downloading the application from the above link, that is iibf.info/app. And if you're iOS user, use the org code GEGKT. So do confirm the audio video quality at the earliest so that we can proceed. So it's about the capital adequacy, the Basel norms. It's about the capital adequacy, the Basel norms. So audio quality is working all fine. So let's start the session. So the first topic that we are going to cover today, it's about identifying and measuring the material risks in ICAAP. ICAAP is the internal capital adequacy and assessment process. And further, in this case, the first thing that we need to do is related to that the bank should be having a very robust risk management framework. Like you could be able to identify the risk, because internal capital adequacy is like that you should be ascertaining that you are having the extra capital with you as per the risk profile of the bank, right? And that can be done only if you identify the particular risk, whether it's a credit risk, market risk, operational risk, interest rate risk, liquidity risk, or any kind of risk. And then the second part, it's related to the risk measurement. So the first point, it's related to that you should be having the risk identification process. The second thing, it's related to the measurement, right? So the one thing, it's related to identification. We always, whenever we are talking about the risks, we are always talking about the identification of the risk first of all. Then it leads to the quantification or the measurement of the risk. And what after the measurement? It's about monitoring the risk, that how we are going to monitor the risks. And then it's about the reporting, that the reporting that we have to do under the MIS. Okay. So let's have a look at the qualitative and the quantitative approaches in case of the ICAAP, the quantitative and the qualitative approaches. So the quantitative approach should form the foundation of the bank's measurement framework. It should be the quantitative approach. It should be the quantitative approach that should be framed over there. That should be framed over there, that we should be looking into the different things, that how we can be quantifying, how we can be quantifying the particular risk. And only if we will be able to quantify the particular risk, we can be working upon that. Clear with it? Clear with it? Yes or not? Do confirm at the earliest. Only if we'll be doing that, only then we will be able to, like, if only we are able to quantify it, then only we can be working upon it, right? That's the first thing. So there are two things related to the ICAAP. One, it is related to the quantitative approach, and the other one, it's the qualitative approach, right? So quantitative approach, that's the primary foundation, that's the core of the ICAAP framework. That's basically being used in the risk models. So that's basically used in the risk models, in the statistic tools. Like the statistics tools are going to do what? They are going to tell you about that what is the value of that particular thing, right? You can be looking into capital estimations. So higher uncertainty or complexity will be leading to higher capital cushion requirement, right? So that's about the quantitative approach. And what is the limitation related to the quantitative approach? What is the limitation? Because in case of the quantitative model, we do focus on the outcome only, right? It's not sufficient for ICAAP purpose, because ICAAP must be considering extreme but the plausible events also, right? Because it's oftenly focused upon the outcome only, And in case of the quantitative approaches, it's not sufficient. It's not sufficient. Why it's not sufficient? Because ICAAP must considering the extreme but the plausible events. On the other hand, we are having the qualitative and the stress-based approach. The another one, we are having the qualitative and the stress-based approach. Now, this qualitative approach is going to complement. It's not a replacement of the quantitative, but it's going to complement the quantitative methods. So whatsoever the quantitative methods are there, right? So the qualitative methods are going to complement those, and it includes the stress testing and the scenario analysis. So two things are there under the qualitative approach. One, it is related to the stress testing because we are also to look into those extreme but plausible events. And the second one, it is a scenario analysis, right? So what is the main purpose? That we also want to include, we also want to capture the low probability events, like the low probability events, which are the extreme events, but which are having a very big impact, which are having the very big impact. So we also want to cover those particular events. We also want to capture those events, right? So what it will be helping us into? It will be helping us so as for the capital resilience, and also it will be helping us for the survival under the stress conditions. Then after that, it's related to the risk aggregation and the diversification effects. The risk aggregation and the diversification effects. If you have understood the qualitative and quantitative part, do let me know at the earliest. Right? Okay, so all fine. So then it's about the risk aggregation and the diversification effect. Now, if we look at the risk aggregation, what does it indicate? That we should be evaluating the risk, first of all, at the individual level, at the portfolio level, and also at the enterprise level, right? So let's the case that we are identifying the risks. So at the individual solo level, at the branch level, let's say at the complete portfolio level, we identified the risk, and also the complete enterprise level, we identified the risks, right? Now the system should be aggregating these risks using the defined framework, like so that there is no double counting, because it may be the case that we've already counted the risk under the portfolio level and further it is also covered under the individual level. So we do not want the double counting. We want to avoid the double counting, right? And we also want to ensure the consistency. We also want to ensure the consistency. And what about the diversification effect? That not all the risks are going to materialize simultaneously. It's not the case that all the risks are going to materialize simultaneously, right? So the bank should be considering the correlation between the risks. It's not like the risk is not correlated to the another one. The risks are correlated to another one. And further, we should be looking at the offset effect also. What is offset effect? Like if one risk is increasing something, it may be the case that the another risk is decreasing something. So we should be looking at the net effect, right? So RBI expects conservative recognition and overestimation of the diversification benefit is discouraged. So RBI says that we are not to take the diversification benefit. We're not to take the diversification benefit, but the risk aggregation is to be done. But the risk aggregation is to be done. The next topic, it's about the ICAAP document. What is ICAAP document? So it's a comprehensive formal document that basically contains the complete assessment that how we have assessed the bank profile, risk profile, right? The capital adequacy analysis. So under ICAAP, particularly what is to be done? Under ICAAP, particularly what is to be done? We have to assess the bank risk profile. So we will be assessing the bank's risk profile, and based upon this risk profile assessment, we'll be looking at that whether we are having the adequate capital with us. That is also to be looked into. So we'll be looking into adequate capital assessment, that will be done, and also that how we are managing the risks, risk management framework. So these things are particularly there. And further, they should be, the ICAAP document should be submitted to the regulator also, to the Reserve Bank of India, and it should be approved. The ICAAP document is to be approved by the board of directors, and thereafter it should be submitted to the Reserve Bank of India. What it contains, it contains the bank's risk profile, the assessment of the capital adequacy, and the risk management framework. It contains these things. There are multiple sections into the ICAAP document. The first one, it's about the executive summary. It's a very critical section. It's a very critical section. What is the main purpose of ICAAP executive summary? The main purpose is to provide you a snapshot, for the high level snapshot, that what is the outcome and what is the methodology. So it's basically a snapshot that will be telling you about the outcomes as well as the methodology, that what methodology we are covering here. So it's going to tell you about the background, overview of the bank's operations, the regulatory context over here. It's going to tell you about the current and the projected financial and capital positions, like present capital levels, the future capital projections for the same, right? And also about the capital adequacy, like the capital adequacy ratio level, internal capital assessment, like, and also what is a regulatory requirement, like a difference between them or a comparison between them, and also about you the firm-wide oversight, the firm-wide risk oversight, like the governance structure, what is the role of the board or the risk committees or the senior management. And also it's going to tell you about the key sensitivities and the future scenarios, like what were the stress test results, what were the scenario analysis outcomes, and also the aggregation and the diversification, like risk aggregation methodology which was there, what were the assumptions for the diversification of the risks, diversification assumptions were there, right? And then it's related to testing and adoption of the ICAA, like back testing, what was the model, for model validation, what was the assumptions, what was the things which were kept in mind, and what were the audit findings, those all things. So those all things are explained under the executive summary. Like it tells you about the outcomes, that what were the outcomes of the ICAAP and what were the different things or the different methodologies that we used in case of the ICAAP. So that's about the executive summary. That's the executive summary. Then the next, it's about the pillar number 3. The pillar 3 is related to the market discipline. Market discipline is about transparency. It's about the transparency, that you should be giving the disclosures. So the major purpose of the objective of the market discipline pillar number 3, it's related to, so as to promote the market discipline through the transparency. So we are to give the disclosures, and there are the quantitative disclosures as well as the qualitative disclosures. Quantitative, which give you a particular value, and qualitative disclosure just give the idea that what things are being done, right? And it basically enable the stakeholders. Who are the stakeholders in a company, in a bank? The investors, the analysts, the depositors. These are the stakeholders. So it basically enable the stakeholders that they can be looking into the risk profile of the bank. They can be evaluating the capital adequacy, that whether the proper capital is being maintained, and what is the risk profile of the bank, and what are the risk management practices which are being followed by the bank, right? So there are disclosure requirements over the banks. And what are these disclosure requirements? Like, first of all, there are some type of disclosures which are the annual disclosures, which are the annual disclosures, like which are to be disclosed once in a year. And this cover both disclosures, whether they are the qualitative disclosures or the quantitative disclosures, those are there. And those are to be published in the annual reports, like the annual financial statements, and those can also be published on the bank's website. And further, there are also the interim disclosures. The interim disclosures are those disclosures which are to be disclosed in between the year. Let's say in the mid of the year, it is to be disclosed. So there are some thresholds related to it, and it's quite important. The first threshold is related to those banks which are having the capital funds greater than or equal to 100 crore, right? So there are quantitative disclosures also, frequencies on half yearly basis, and it can be submitted on the website. And also there are the banks which are having the capital greater than or equal to 500 crores, greater than or equal to 500 crores. So those particular disclosures are also applicable on the subsidiaries. Let's say if the bank is a group and bank is the main entity, and the bank is also having the step down subsidiaries or subsidiaries, right? So the requirement would be on the subsidiaries also. It will also be applicable on the subsidiaries also, where the capital fund for the bank is greater than or equal to 500 crores. So in that scenario, the quarterly disclosures are to be given like on quarterly basis, like related to the tier one capital, the total capital, tier one ratio, capital adequacy ratio, right? And definitely through the websites, it should be disclosed. It should be disclosed. So it's about the pillar number 3, that the disclosures must be there. Disclosures must be there. Further, it's related to validation. Now, why the validation should be there? Definitely the validation should be there. Otherwise, what would be the basis of the disclosures? So the disclosures definitely should be undergoing a proper validation process, a proper validation methodology, and the consistency must be there with the audited financial statement. Let's say there are the financial statements and there are the disclosures which are made and the figures are all different. Then what is the use of it? No use. So it should be consistent. The disclosure whatsoever are made, there should be consistency of these disclosures with the financial statements. It's very much required, right? So whatsoever the audited financial statements are there, it should be consistent with it. And if any another additional information is to be disclosed, that should also be given. Like if there are any internal controls, or let's say if it has been reviewed or verified, definitely it should be there. So validation is related to checking the accuracy, checking the reliability and the credibility of the information. That's basically about it. That's basically about it. So any of the supplementary material like the management's discussion and analysis, which we say to be MD and A, we say to be MD and A, management discussion and analysis, that should be given about it, right? Then there is a concept of materiality. Materiality, only that information should be disclosed which is going to make an effect. And information is material, like if we do omit it, or let's say if we give a misstatement related to it, it's going to have an influence. It can basically change the economic decisions of the users. So that kind of information is said to be the material information. So whatsoever should be disclosed, only those things should be disclosed which are material. And what things we say to be materially responsible, like if we omit that particular information, or if we misstate that particular information, that is going to make an impact. And bank management, based on the judgment and the policy, is the decision authority, so as to check that which information is the material information and which is not. Further, it's about the proprietary and the confidential information. Should we also be disclosing the proprietary or confidential information? No. Why? What do you mean by proprietary information? Which information we say to be proprietary information? Like if you're talking about the product design, system design, the business strategy that we are following, no, we should not be disclosing it. Because if we disclosed it, then it is going to reduce the competitive advantage of the company, right? So it should not be disclosed. And what about the confidential information? The proprietary information, I told you, that's about the system design. Let me write over here. It's about the system design, or let's say the product design, or let's say the business strategies, right? These are the proprietary informations. But what about the confidential informations? Confidential information is like customer data, Like if it is required by the regulator, then we can be sharing it. It's about the contractual information, right? It's protected under the legal agreements. So it should not be disclosed. But the general disclosures can be given wherever required. Like general disclosures like how many FD accounts the bank is having, how much let's say deposit is mobilized in the last year. So that's the general information. Clear that? And after that, it's about the general disclosure principles. So definitely the bank must be having a board approved formal disclosure policy. Board approved formal disclosure policy must be there. Then, and that policy should be covering that what is to be disclosed, what level of detail can be given, what is the disclosure process, how it is validated, how the appropriateness of the disclosure is checked, and what is the frequency of the disclosure. So these things can be checked. So bank should be having a formal disclosure policy which is approved by the board of directors, right? And then it's related to pillar 3 disclosure area. So there are total 13 key headings related to it. There are 13 areas related to it, like scope of application, capital structure, capital adequacy, credit risk mitigation, credit risk IRB approach, standardized approach, right? Operational risk, market risk, duration approach, standardized approach, right? So these all things are to be disclosed. These are the pillar 3 disclosure areas. As per the pillar 3, the things which are to be disclosed, right? So that will be all related to it. I hope that you must have understood all the concepts related to it. If still you're facing issues related to it, and if you want to know much more about it, do confirm at the earliest so that we can proceed. And further, if you're having any of the doubts, you can be posting us. Simply just do write CAIIB doubt, right? And do mention the doubt and further WhatsApp it to the number 83609 the doubts I'm talking about, right? So we are happy to take your doubts. So thank you so much. And the complete crash course is also available. And now we are to cover the next chapter, which is related to the asset classification and the nomination and further the provision norms. It's about the asset classification and the provision norms. So here we have mentioned wrongly the nomination norms. No, it's not the nomination norms. It's about the provisioning norms we are going to talk about, right? So let's start this particular chapter. So the first thing first, it's the chapter number 3 from the module D of the BFM, and quite important it is. It is quite important. Numerical questions can also be asked from the particular chapter related to the asset classification and the provisioning norms. So what are the special mentioned accounts? Let's say we sanctioned a loan to person A. Person A is paying properly, that is basically a standard account. If the person is paying properly, and let's say there is some irregularity, the person A is not able to pay the amounts, there is irregularity in that particular account, right? In that scenario, what will be there? In that particular case, the irregularity is there. The account will be under the SMS status. The account will be under the SMA status. SMA is the special mentioned account, which basically cover those loan accounts which are showing the early warning signals of stress, which are showing the early warning signals of stress. Like before the accounts classified as a non-performing assets, for the first 90 days of the default, for the first 90 days of the default, the accounts are classified into the SMA status. So the main objective of the SMA status is related to that we should be looking at those particular accounts that they are covering the incipient stress stage. And that's basically based on the payment delay. Let's say if the delay is between 1 day to the irregularity is between 1 day to 30 days, we say to be SMA 0. We say to be SMA 0. And if the delay is from 31 to 60 days, we say to be SMA 1. And if the delay is between 61 days to 90 days, we say to be SMA 2. right? And after the SMA2 status, the account will be classified into the NPA category, non-performing asset category. But let me just clarify one thing to you. This is just there so that we can do the early detection of the asset quality deterioration, and also we may be able to facilitate the timely correction actions. That's it. That's why it is here. Otherwise, even during the SMS status, the account is classified as a standardized asset only. It's not the case that the account will be classified as non-performing asset. So it's not the case related to it that the account will be classified as a non-performing asset. It's just the case the account is classified as a standardized asset, but it is just showing the early detection of the deterioration. That's it. Okay, so that's about it. I already have told you. So there are some particular classifications related to it as per the RBI norms. The one it's first of all related to the SMANF, that is due to the non-financial signals of the stress. Like you were to submit some statements, but you failed to do so. Due to that particular thing, you were basically classified as a special mentioned account status. And the other three are related to that I have already explained. Like the SMA 0 is related when there is no overdue more than 30 days, like up to 30 days. SMA 1 means when the overdue of the principal or interest is up to 60 days, like from 31 to 60 days. And if it is beyond 60 days, but up to 90 days, then it is SMA 2 status. Then it is SMA 2 status. And as a SMA-NF status, non-financial stress, would be related to the qualitative indicators. Like if there is decline in sales or cash flow, or let's say if there were frequent check returns, if there were operational inefficiencies, if there were management issues, right? Due to that, particularly, it will be holding for it. Clear with it? So it is governed by the guidance of the Reserve Bank of India. And SMS classification is not just based upon the principal amount. It's based on both the financial and non-financial indicators, based on both the principal and interest amount. And SMA accounts which are under the SMA 2 status are to be reported to the CAIIB. To the CAIIB also the SMA status is to be reported. What is CAIIB? It is Central Repository of Information on Large Credits. Central Repository of Information on the large credits, right? Now let's have a look at the NP guidelines. But as I told you that during the SMS status, even if the account is having the SMS status, there is no specific provisioning requirements are there because the account is still under the standard category. And whatsoever the provision which is to be maintained for the standard account category, only that provision is to be maintained. You are not to maintain any extra provision for the SMA accounts. Further, it's related to the non-performing asset guidelines. It's related to the NPA guidelines. Now, once the 90-day period is over, thereafter, the account will be classified as a non-performing asset. Like, first, we are talking about the term loan. Term loan, there is a fixed payment repayment schedule. Let's say you have to pay the monthly installment and you're not paying for the last 3 months. You're not paying for the last 3 months. So the interest or the installment is overdue for the 90 days. Then the account will be classified as NPA if it is a term loan. And the first category of the NPA would be what? Anyone? Do answer at the earliest. What will be the first category of the non-performing asset? It is a substandard asset. So first of all, when the account will be irregular, it will be SMA 0, then SMA 1, SMA 2. So it will be 0, 1, and 2. And thereafter, it will be NPA. And in NPA, the first category it is a substandard asset. It is a substandard asset. Clear with it? Right? And after that, it will be doubtful asset. Further, it can be classified as a loss asset. So we'll be covering all the different types of NPs also. And what about the CC account? For the term loan, I just told you that overdue more than 90 days, it will be like uh, NPA. But what about the CC account or the overdraft account? Now the criteria is quite simple. Like if the account is out of order for more than 90 days, if the account is out of order for more than 90 days, then the CC account or the overdraft account will be classified as a non-performing asset. The first condition related to the out of order is like outstanding balance condition. So if your outstanding balance, kindly please pay attention to what it काफी important है. It's very much important. So if outstanding balance is greater than the drawing power, it's greater than the drawing power, or it is greater than the sanction limit, this is the first condition. Now, what is drawing power? What is the difference between the drawing power and sanction limit? Like your bank XYZ sanctioned a CC limit of rupees 5 lakh to the shop. The CC limit of 5 lakh is sanctioned to the shop based upon the stock of rupees 10 lakh, let's say 50% margin was to be maintained. The shop is maintaining 10 lakh rupees of the stock, and against it 50% of margin was maintained, and 5 lakh of the CC limit was sanctioned to the shop, right? That was the case. Now, when the bank went for the inspection, they found that the actual stock of 10 lakh is not there. They're just maintaining the stock of 6 lakh rupees. Now, the sanction limit is the sanction limit is 5 lakh rupees, but now the stock is just 6 lakh rupees. So the eligible CC limit is 50% of it. That's 3 lakh rupees. Why? Because 50% of the margin is to be maintained as per the conditions of their agreement, right? So now bank will be doing what? Bank will not be reducing the sanction limit. The sanction limit is still 5 lakh rupees, but the bank is going to reduce the drawing power that the the borrower won't be able to draw more than 3 lakh rupees. So the drawing power will now be shifted to 3 lakh rupees. So there is existing a relationship between a drawing power and the sanction limit, that the drawing power at any point cannot be greater than the sanction limit. It's always lesser than or equal to sanction. There is a relationship between it. So the first condition is like if the outstanding balance is greater than the drawing power or the sanction limit, then it is classified as out of order. The second condition, it's like when there is no credit in the account for the 90 days. There is no credit for 90 days. Then it is basically out of order. And further, if the credit was there, but it was not able to cover the interest debited, like amount credited, but not up to the interest amount debited. So it was like, let's say the interest was debited for rupees 15,000, but you deposited just rupees 14,500. It was not able to cover the complete interest amount debited for the 90 days. So that's also the point. Like it will be like your account is still out of order. Or it could be due to the stock statements. Let's say if you have not submitted the stock statements for 3 months, the stock statements not submitted for 3 months or more, then it is also said to be out of order. So the balance is outstanding balance is greater than the drawing power. It will be like out of order from the day one. But for credit of in the account, it will be out of order after 90 days. For the amount not credited, it will be out of order after 90 days. For stock statement not submitted, it will be out of order after 90 days. And if it remained out of order for more than 90 days, then your CC account or overdraft account will be NPA. Then it will be classified as a non-performing asset, right? So here are the conditions. Those are already mentioned. Like the first condition I already told you, the outstanding balance is greater than the drawing power or the sanction limit. When there is no credit in the account for the last 90 days, or let's say the amount is credited, but it was not able to cover the interest debited for that period, or when the stock statements are not submitted for the last 3 months, right, or delayed by 3 months, it is still said to be the out of order account. The next one, it's about the bills account. Let's say we are talking about the bills purchased or bills discounted. Now, if the bill is overdue or unpaid for a period for more than 90 days, then it will be classified as a non-performing asset. Then it will be classified as a non-performing asset. Then what about the agriculture? Very much important. It's very much important. Can be directly asked in the exam for the agriculture purposes. Now, we are having the two type of crop durations. One, it is a short duration crop. The other one is a long duration crop. We say a crop to be a short duration crop if the crop season is up to 1 year, like where we are doing the harvesting within 1 year or up to 1 year. Then we say the crop to be the short duration crop. And if the harvesting is not done within 1 year, then we say such crop to be the long duration crop. And NPA condition says if the installment of the interest is due in the case of the short duration crop for more than two crop seasons, then we classify the agriculture loan as a NPA if it is a short duration crop. In the case of the short duration crop, if the installment or the interest is overdue for the two crop seasons, then it will be classified as NPA. And for the long duration crop, if the crop season is longer than the 1 year, longer than one particular period, installment or interest is overdue for one crop season, then we classify it as a non-performing asset. Clear with it? Then after that, it's about the consortium accounts. What do you mean by consortium accounts? We are talking about the multiple banking accounts. Let's say corporate XYZ required a loan of 1,000 crores. Bank, single bank was not able to give that particular sanction, that particular loan. So three banks decided to give that particular loan individually, but under a multiple banking arrangement. So A sanctioned 400 crores, B sanctioned 300 crores, C sanctioned 300 crores. So, right. So here the classification of the NPA would be based on the individual bank's recovery record. So it's not like that based on all the banks, the record will be changing. No. If A is getting the proper recovery, it will be a green account. And if B is getting the proper recovery, it won't be classified as NPA. Let's say there was default in C's account, so it will be classified as NPA. Clear with it? Right? So that's how the classification is done in case of the consortium accounts. It's basically based on the record of the recovery with the individual bank. Then after that, it's about the credit cards. It's about the credit cards. Now, in case of the credit cards, there is one amount which is mentioned, which is MAD. MAD, it's about 5 to 10% of the total outstanding amount. So you can be paying the total amount also, but at least you have to pay the MAD. And if MAD is not paid fully in the 90 days, if it is not paid fully in the 90 days, then the credit card will be classified as a non-performing asset. Further, it's about advances against deposits, NSAs, KBPs, life insurance policies. NSA is what? NSA is National Savings Certificate. KBP is what? Kisan Vikas Patra. So such advances cannot be treated as an NPA if the adequate margin is maintained. So if appropriate margin is maintained, then they won't be classified as a non-performing asset. So interest can be recognized on accrual basis. Interest is to be recognized on accrual basis, right? So till the date that you have maintaining the appropriate margin, it won't be considered as a non-performing asset. Further, it's about the if the loan is guaranteed by the governments. What about if the loan is guaranteed by the government? So if the loan is guaranteed by the central government, then the account will be evergreen till the guarantee is basically revoked. Till the guarantee is revoked, the account will evergreen whatsoever the default is there. But in case if the loan is guaranteed by the state government, it will attract the normal IRAC norms. It will attract the normal IRAC norms. What is IRAC? IRAC is income recognition and asset classification norms. that is income recognition and asset classification norms. Right? Now, let's move further. So told you that even though if the irregularity is there up to the period of 90 days, the account will be classified as a standard asset only. And even for the standard accounts, we are to maintain the provision. Even for the standard account, we are to maintain the provision. And after the account is showing the irregularity and there were no changes, the account will turn out to be NPA and it will remain substandard asset for 12 months. And if it retained there for 12 months, after 12 months, it will become the doubtful asset. And under the doubtful asset, we are having the multiple categories, like we are having the DF1, DF2, DF3. So under the DF1, it will be remaining there for 12 months. Under the DF2, it will be remaining there for 24 months. And for greater than 36 months, like 12 plus 34, 36 months, it can remain indefinitely under the doubtful 3 category. And if for some reason the auditor wanted the asset to be retained in the bank book, it will be classified as a loss asset. In that case, it will be classified as a loss asset and it will be retained in the books. Otherwise, the bank can be writing off such accounts where the bank has made the all the possible things for the recovery purposes, but the bank is not able to recover the amounts. Right? So let's have a look at the provisioning requirements. Very much important. The provisioning requirements. Like if the loan asset is related to the direct agriculture or small medium enterprises, small micro enterprises, not small medium, it's about the small and micro enterprises, then 0.25% of the provision is to be maintained. 0.25% of the provision is to be maintained. And for all the other standard loans and advances which are not otherwise in any specific special category, 0.40% of the provision is to be maintained. If it is related to commercial real estate, then 1% of the provision is to be maintained. And if it is related to CRERH, means commercial real estate but residential housing, then 0.75% of the provision is to be maintained. And if it is related to teaser rate housing loan, in case of the teaser rate housing loan, there is low interest rate in the initial period and thereafter the interest rate increases, the 2% of the provision is to be maintained. The 2% of the provision is to be maintained in that case. Clear with it? And here you have to maintain the provision even for the standard accounts. Even when the account is working all fine, you have to maintain the provision. But if the account is turned out to be a non-performing asset, then higher provision is to be maintained. So when the account is substandard asset, in case of the substandard asset, we are to classify the account, whether the account is a secured account or unsecured account. The complete loan account, the complete outstanding balance is to be classified, whether the account is a secured account or unsecured account. We say an account to be secured account. We say an account to be secured account. In what case? We say to be secured account when the value of security is greater than 10%. Value of security is greater than, not equal to, if it is greater than 10%. Like if you're having the value of security greater than 10%, then we say such account to be secured account. But if the value of security is lesser than or equal to 10%, up to 10%, then we say such account to be the unsecured account. Unsecured account. And what value of security is to be considered? The value of security that we were having ab initio when the loan was sanctioned. That particular security amount is to be considered. It's not the security amount that basically existing today. It's about the security amount that was previously there. That is to be considered. Right? So value of security, if it is greater than 10%, we say such account to be secured. And if the value of security is up to 10%, we say such account to be unsecured. And if the account is secured, then 15% of the provision is to be maintained. And if the account is unsecured, then the 25% of the provision is to be maintained. Getting it? That's the point. And if the account is unsecured, but let's say it's related to the infrastructure, then 20% of the provision is to be maintained. Only and only if it is related to infrastructure. No incentive available in the case of the secured infrastructure account. In that scenario, 15% of the provision is to be maintained anyway. Clear with it? Right? So in case of the substandard asset, we have to classify. We have to classify whether the account is secured one or unsecured. When we say such account to be secured one, when the value of security is greater than 10%, is greater than 10%, not equal to 10%. It's about greater than 10%. I'm updating it. It's greater than 10%. Then we say to be secured substandard account. And the value of security, if the value of security is lesser than or equal to 10%, then we say such account to be unsecured account, right? So it's about the unsecured amount that's mentioned over here, right? That value of security is lesser than or equal to 10% from the very beginning when the loan was sanctioned. And here are the provision amounts. For the secured substandard account, it is 15% of the provision. And for the unsecured, it is 25% of the provision, right? And if it is related to infrastructure, then it is 20% of the infrastructure. Then after that, the category is doubtful asset category. I already told you that under the DF1 or D1 category, whatsoever you name it, under the D1 category, it remains there for 12-month period. For the DF2 category or D2 category, it remains for 24 months. And for the D3 category, that is greater than 36 months, it's going to be there. And it can indefinitely be there under the doubtful 3 category. And under the doubtful category, we have to bifurcate the balances. See, in the case of the substandard assets, there was no bifurcation of the balances. You just identified the loan is secured or unsecured. That's it. But in case of the doubtful asset, we have to bifurcate the balances. Like, let's say we are having the total outstanding balance of 20 lakh rupees and you're having the security available of 13 lakh rupees. So then we'll be bifurcating like the realizable value of securities 13 lakh rupees and the shortfall in securities 7 lakh rupees. That is, you need to bifurcate in case of the doubtful assets, but not in the case of the substandard assets. So here we'll be bifurcating the balances. So for the D1 account, for the D1 category, doubtful 1 category, where the NP remains for 12 months, right? For the realizable value of security, for the realizable value of security, the particular percentage is to be maintained at 25%. The provision is to be maintained at 25%. And under the DF1 category, where the shortfall in security is there, 100% of the provision is to be maintained. Just keep one thing in mind. Wherever the shortfall in security is there in case of the doubtful category, 100% of the provision is to be maintained, whether it is DF1, DF2 or DF3, right? So if it is related to shortfall in security, then 100% of the provision is to be maintained in case of the doubtful category. So even if it is related to DF2 and there is shortfall in security, 100% of the provision is to be maintained. And in DF3, whether it is secured or unsecured, doesn't matter. You have to maintain 100% of the provisions. You have to maintain 100% of the provision, right? And if it is related to DF2, if it is realizable value of security, if it is realizable value of security under the DF2 we are talking about, it was related to DF1. Under the DF2 we are talking about, then 40% of the provision is to be maintained for the doubtful 2 category, right? And under the loss asset, if due to any of the reasons auditor wants that you should be retaining the asset in your books and not to write off, then 100% it should be retained under the loss asset category and 100% of the provision is to be maintained under the loss asset category. Getting it? So that was the point related to it so far. I hope that you must have understood. Then the next one, it's about the NPA on account of erosion of the value of security. We're talking about the ab initio security. We're talking about the ab initio security, like the security which was available in the very beginning. Let's say in the beginning you were having 10 lakh rupees of the security, and now the value is eroded by 50%, by more than 50%. Let's say now the value is like 3 lakh rupees. The security previously which was available was 10 lakh rupees, but now it is eroded. Now the erosion is there, and now the value of security is just 3 lakh rupees. That value eroded. Now the realizable value of security is less than 50%. Previously, we are considering 10 lakh as 100%, but now it is just 30%, less than 50%. Then we will not be transferring the account to the substandard account or something. We will directly be transferring this particular account to the doubtful asset category under the DF1. Under the DF1, we will be directly be transferring this account if the value of erosion, the realizable value of security is less than 50%. And if the realizable value of security is less than 10%, let's say it became just 50,000 rupees from 10 lakh rupees. It's just 5%. It's basically less than 10%. Then we'll be directly be classifying this asset as a loss asset. Then we'll be classifying this particular asset as a loss asset. If the erosion is like more than 50%, then doubtful asset. If erosion is more than 90%, then particularly the account will be classified as a loss asset. Then when the account is classified as a non-performing asset, the interest income is recognized on cash basis, not on accrual basis. Otherwise, what happens? Let's say we are we are basically accruing the interest on the loan account, like the interest is being charged, but it will went due on the basically when it is due, then it is basically become your income. Then it will become your income, right? But in case of the NPA accounts, when only you have received the cash amount, then you will be considering it as your income. So in case of the NPAs, the recognition of interest is on cash basis, not on accrual basis. It's on cash basis and not on accrual basis. And as I told you that if the loan is granted by state government, then the normal IRAC norms will be applicable. If it is guaranteed by the central government, then the account will remain evergreen till the government repudiates its guarantee. And further, if the account with the stock statement overdue for 3 months, let's say in case of the CC account, it will be out of order after 3 months, and thereafter 90 days it will become NPA. Like it will be considered out of order if the account statement is not submitted for 3 months, and when it is out of order for 90 days, then it will become non-performing asset. Further, accounts in which it's quite important point. Accounts in which the renewal or renewal is overdue for 6 months, that will become NPA. That will become the NPA. And classification of the accounts is borrower wise, very important. Very important. These all points are actually very important. The classification of the NPA is borrower wise. Let's say the borrower A is maintaining multiple accounts, CC account, term loan account, right? Now the CC account became NPA. Let's just assume the CC account became NPA. The term loan account will also be classified as NPA even if the regularity is being maintained there, because the classification is as per collation. The classification of the NPA is as a percolation. It is basically based upon the basically classified borrower wise and not account wise, right? And for commercial real estate, I've already told you that the provision of 0.575% is to be maintained. Then after that, it's about the CRILIC. It's about the CRILIC, right? So CRILIC is what it is: Central Repository of Information on the Large Credits. So CRILIC is what? CRILIC is a centralized database which is maintained by the Reserve Bank of India. It's a centralized database, right? So whatsoever the credit exposure is there related to the large borrowers, that is to be captured. And what is the main objective related to it? We want to early detect the signals of stress in the large accounts. We want to monitor the system-wide exposure We want to prevent the NPA and evergreening. It should not be the case that the accounts are evergreen. Evergreen is like the bank is concealing the particular status of the account, because if the NPA is there, the banks are to maintain what? The banks are to maintain much more capital, and banks try to basically, safeguard themselves. Like they basically try to like hide the actual account statements, right? And further, where it is applicable for all the scheduled banks. CRILIC guidelines are applicable for all the scheduled banks, all India financial institutions, for NBFCs, and also for the selected corporate banks. It is basically applicable. And what is the threshold limit? It is 5 crore rupees. It is 5 crore rupees is the threshold limit. 5 crore and above, like it covers all the exposures, like fund based exposures, non-fund based exposures, and where the aggregate amount is exceeding 5 crore rupees, that is to be reported to the CRILIC, right? And standard CRILIC reporting is like on quarterly basis. The reporting is to be done within 30 days from the quarter. The reporting to the CRILIC is to be done. And for the large borrowers or the stressed accounts, the reporting is to be done on monthly basis. In that scenario, the reporting is to be done on monthly basis. And all the SMA accounts should be treated to the CRILIC. Where the exposure is 5 crore or greater than that, the SMA status is to be reported. Like SMA 0, 1, 2, all are to be reported. Clear with it? So CRILIC captures the borrower-wise exposures, the sanctioned amount or the outstanding amount, and also it captures the NPA classification or SMA classification, right? So the 360-degree borrower risk profile is captured by it. Clear with it? So that was all about it. After that, the next topic, it's about the accelerated provisioning. If you have understood the point so far, do answer at the earliest. If you have understood the points so far, do confirm so that we can proceed with the next topic of accelerated provisioning. So what do you mean by accelerated provisioning? Accelerated provisioning is like the higher provisioning requirement that is going to be imposed by the Reserve Bank of India. So normal provision is like on substandard, we are charging 15% on the secured one and 25% on the unsecured one. That was normal provisioning. But let's say if the bank is trying to bank is trying to evergreen the account, bank is failing to report the SMS status to the CRILIC, or bank is concealing the actual stress status or asset classification, then RBI is going to impose the higher provisioning requirement on that particular bank as a penal interest. So the regulatory authority here is Reserve Bank of India. Reserve Bank of India will be deciding that what points will be triggering the accelerated provisioning, right? So the one point that can trigger the accelerated provision, that's like non-reporting, that you are not reporting to the CRILIC. So it is required that we should be reporting to CRILIC. But if you're not reporting to CRILIC, then accelerated provisioning can be there. Or it could be the case that mispresentation is there or misstatement is there. Misrepresentation. So that could be the case. Or it could be the case like artificial upgradation is there. Right? Or supervisory concern. So these points could be there. Now, in those all the cases, the accelerated provisioning will be imposed by the Reserve Bank of India. Let's have a look at it. So under the substandard secured account, if it is substandard secured account, generally 15% of the provision is charged. For up to 6 months, there is no change. The same 15% provisioning will be charged. But if the age of NPA is like from 6 months above to 1 year, then 25% of the provision now will be charged instead of 15%. So if the age of NPA is up to 6 months, then there is no change. But if the age of NPA is like greater than 6 months, but up to 1 year, then 25% instead of 15% provisioning will be charged. And if it is substandard unsecured, in case of unsecured, 25% of the provision is charged. Like if it is substandard unsecured, right? And if it is up to 6 months, then 25% of the provision is charged, no matter if it is related to infrastructure or not. Otherwise, in case of the unsecured infrastructure, 20% of the provision was to be charged, but now 25% of the provision will be charged. And if it is from 6 months to 1 year, if it is 6 months to 1 year and it is unsecured, then 40% of the provision will be charged. Instead of 25%, 40% of the provision will be charged. Just simple thing that if it is substandard and up to 6 months, then no change. But if it is like greater than 6 months, up to 1 year and under the substandard, then a big change. Like for the secured, it will be 25%, for unsecured, it will be 40%, right? And if it is related to the doubtful asset category, if it is related to the doubtful asset category, like for the doubtful one category, because it will remain 12 months under the substandard one, and after that for 12 months under the DF1. So here we are talking about the DF1 category. DF1 category, right? If it is there. So for that particular part, for the secured part, it is now 40%. And for the unsecured part, it is 100%. And for the doubtful 2 and doubtful 3, no matter what percentage was to be maintained, it is basically 100% of the provision is to be maintained if the accelerated provisioning norms were imposed by the bank. So the changes were like related to the substandard assets and the DF1 category, that's it. And related to DF2, DF3, 100% of the provision is to be maintained. 100% of the provision is to be maintained. Clear with it? So that will be all related to this video. I hope that you must have understood the concepts, and the further all the points will be covering the next video related to willful defaults, related to the PCA, and also will be solving the numerical questions related to it. So make sure to like this video and further share this video. And if you want to get the complete crash course, simply just do WhatsApp CAIIB crash, right? If you want to crash the CAIIB in this attempt, and WhatsApp it to the number 83609 44207, and I'll be sharing all the details with you. Thank you so much and see you again in the next video.